In the metals quadrant, taking a look at the September gold futures contract, which hit 1 week highs this morning and continued to rally. The absolute low was barely below yesterday's settlement. Yesterday's settlement, 1713.40. We hit 1711.70, which was down just short of 0.2%. And then gold subsequently rallied to the highest level it's seen since July 12th. The precious metal is now up 4 of the last 5 sessions, and it has its first up week, including this week, in the last 6 weeks. That high I keep bringing up, 1738.30, that was up about 1.45%. We did pull back from that level to finish the day up a little bit better than 0.75%. Now, disappointing data was at the core of what was going on in U.S. markets as well as global markets, helping to push gold a little bit higher. Global PMIs disappointed across the board. We had PMIs in Germany fall into contraction territory, PMIs in the EU fall into contraction territory. The services PMI in the U.S. disappointed greatly. Now, this was S&P Global PMI. So these are smaller to more medium-sized businesses than the Institute of Supply Management, which will release their PMIs in a couple of weeks. But these particular numbers set the stage for a slower economy and potentially, at least sometime in the future, a less aggressive Fed, which would be more dollars, dollar inverse relationship to gold, giving a little bit of a boost to gold. That's quite a stretch, to be honest, in terms of what's happening long term. But over the last couple of days, that's been the narrative, along with U.S. yields, which fell double digits, boosting gold. Again, the yields fell, the dollar weakened, inverse relationship between the dollar and gold on a typical day, and then gold got a little bit of a bid from that. We actually have the 10-year and 30-year fall, 13 basis points on their yield and 11 basis points on the 30-year respectively, and most of it came in the last couple of days. That's why we've had 2 days of rallies in gold. At least it's one of the components.